SREI goes the DHFL way. RBI superseding the Board of Directors and making an application to the NCLT to initiate insolvency proceedings. Rajneesh Sharma, CGM, Bank of Baroda, has been appointed administrator.
The Reserve Bank of India on October the 4th superseded the Board of Directors of SREI Infra and SREI Equipment Finance Limited owing to governance concerns and defaults by the aforesaid companies in meeting their various payment obligations. The development comes a week after creditors of SREI Group rejected a request by the company seeking a one-year standstill from any action, legal or otherwise, to recover dues estimated at around 35,000 crore rupees. The Central Bank of India has appointed Rajneesh Sharma, the former Chief General Manager at the Bank of Baroda, as administrator. Sharma has been the chair of the Lenders Committee overseeing the accounts of the SREI Group of companies. The banking regulator will soon initiate the process of resolution of the non-banking financial corporations under the Insolvency and Bankruptcy Rules 2019 and apply to the National Company Law Tribunal to appoint the administrator as insolvency resolution professional. The action has been taken under this section of the Reserve Bank of India Act of 1934. The Kolkata-based non-banking financial corporation has been battling a human resource crisis since December last year, with nearly 230 to 250 people leaving the crisis-ridden group. A UCO bank-led consortium had approximately 35,000 crore rupees in exposure to the SREI Group, while State Bank of India and others have already classified their loans as non-performing assets earlier this year. Bureau Report, Business Today Television.
Market veteran Madhu Kela, in a conversation with Udayan Mukherjee and myself, shares a detailed overview of where he sees value in the market and opportunity for wealth creation in the current frenzy that we continue to see.
Last week we got you Rakesh Jhunjhunwala on the show, and today we have for you an old friend of his and a multi-decade veteran of the stock market, Madhu Kela. Madhu, it's an absolute pleasure to have you on the show, and I must begin by asking you how you're feeling now after such a strong rally in the market. Are you comfortable with where we are, or are you beginning to feel a little uneasy, a slight sense of vertigo?
So, Udayan, you know, just as a background, this is the biggest possible and the wealth creation at least I have seen in my career in last 30 years. Both in terms of the quantum of money being created, the quantum of wealth being generated, and also in the time frame which it has got generated. The last 18 months, global markets have seen $60 trillion of wealth creation, and India has seen something like $1.7, $1.8 trillion. You know, obviously this is in the backdrop that $35 trillion of new money has got printed world over. So we have to keep these facts in mind when we are assessing the markets. So again, after such a big rise and in this time frame, what is more important is there a risk of a crash? That is what investors are most worried. So is there a possibility of a correction? I would see after such a steep rise, correction could happen and will happen in an orderly manner in any market. So this market can also see corrections in times to come, and those reasons will only be known of the correction after they have occurred. But I would say I personally do not feel that we are anywhere near any crash, or I don't see any event as of now which is pointing towards any crash or anything of that kind for this market.